Australia's productivity slump is finally getting the attention it deserves, with the government now acknowledging the issue, planning a national reform roundtable after a decade of stagnation. Living standards and real wages have now stalled. Experts say boosting productivity is the key to reviving economic growth and easing cost of living pressures as well. For more, let's head to Sydney. We're joined by Shane Oliver, Chief Economist at AMP. Great to see you, Shane. Why has productivity become such a hot topic in Australia right now?
To be honest with you, I think it follows on from the cost of living crisis that we've been seeing and the obvious observation that that is correlated with the stagnation in our productivity. So productivity is basically the amount we produce as Australians for each hour worked, and it's a key driver of our living standards over time. There's not a perfect correlation there, but when you look at the trend in productivity, it was very strong in the 90s and 2000s, and that correlated with very strong growth in real household incomes in Australia, and also strong growth in per capita consumer spending. Since then, of course, there's been a steady slowdown and a virtual stagnation over the last decade, both in productivity and in real household disposable income in Australia. So I think it's basically pressure, and you can see it in that chart here. The green line is the productivity line, output per hour worked basically, and the red line is real household disposable income. There was a nice spike there at the time of the pandemic as we all got locked at home and couldn't spend on services but could spend on goods, and services aren't as productive as goods, so it spiked, and of course since then it's fallen back again. But if you look at it over the last 8-9 years, it's basically stagnated, and I think that's what's driving this focus on productivity.
It's a really fascinating chart. It says so much in there, doesn't it? It talks about the 1980s and obviously some of the changes that were made there. Then you've got the mining boom period as well. And then you've got COVID. And obviously, as you mentioned, COVID, we have people working from home. But on the other side of COVID, you have seen a drop in living standards, and a lot has changed since then, hasn't it? So why do you see low productivity impacting wages and living standards?
It's basically, if you think about wages, if you've got 4% wages growth, but at the same time you're producing 1.5% more than you were a year ago for each hour worked, then the real rise in the cost to the business that employs you is 2.5%. And believe it or not, that's in line with the inflation target the Reserve Bank sets. So that's something the Reserve Bank would be happy with. But if, of course, you've got a productivity growth of 0, then it's a 4% wage rise, but the business also sees a 4% rise in its costs. And of course, it then decides, well, does it take a hit to its profits? That's bad news for shareholders. Or does it pass that on as higher prices for its products, which then adds to inflation and pushes it above target? Either one of those leads to a bad outcome, and you probably get a mix of the two. But the outcome ends up being a situation where wages go up, prices go up, real living standards don't go up, company profits take a bit of a hit. The best outcome in all of this, the secret sauce, so to speak, is productivity. If we can get productivity up, then we can enjoy decent rises in our wages after inflation. Companies can make decent profits. I guess we also pay decent taxes going to Canberra, so that enables Canberra to continue providing the services we all want. But if we can't get it up, then it can lead to a stagnation in our living standards, and I think that's what we've started to see over the last decade.
Yeah, it's interesting. Talk us through this chart. So this is public spending as a share of Australian GDP, and obviously right around the world post-COVID, a lot of money was pumped into the economy. Jim Chalmers has spoken about, where Australia's economy would be if it wasn't for government spending. But is that leading to a productivity crisis as well?
Look, I think it's contributing to it. We know that the public sector is less productive than the private sector, and consequently, if you're putting a lot of resources into your public sector, which is basically what that chart tells us. We've got record levels of public spending. This is federal, state and local governments around Australia. Record levels of public spending compared to the situation over the last 65 years or so. That in turn means less resources available for the private sector. And of course that makes for a less productive economy. So you can see the way it's surged in the last 5 years. Obviously, the pandemic was initially part of that, but it's continued beyond that. Obviously, the growth in the care economy and so on, they're all impacting. But it is one factor helping drag back productivity. And I think, the Treasurer is right to say that it may have helped the economy over the last year or two kept it growing, that surge in public spending. But by the same token, it also meant higher than otherwise interest rates, because the Reserve Bank was trying to slow things down, get inflation back under control. Interest rates, I think, ended up being higher for longer because we had that public spending surge. So we could have got lower interest rates a lot earlier if we didn't have that, which probably would have meant a stronger private sector, which in turn would have meant, I think, stronger productivity growth.
All right, Shane Oliver from AMP, Chief Economist there. Thanks so much for your time.
My pleasure. Thank you.